Hi friends, welcome back everyone to Any Trader Can Fly. This is Prince once again here. So friends, today's video is going to be very special and it's very unique. Yes, I can 100% assure you that this content is not available anywhere on YouTube. This is a very innovative concept which I have developed for myself and I would like to share it with my entire community. So please stay tuned till the end of the video. And one more important thing is, this is the right time for you to make a big fortune in your life. So how to know how to make this fortune? For that also you have to watch this video. You can't miss this video. And also I will be giving this concept with the backtested data. It's not just going to be in the air. I'll show you how I have done the backtest. So in case if you want to collect the backtest file from me, I'll let you know how to do it. So you can stay tuned till end of the video. Okay. So now coming back to the topic. Friends, you would have heard, or I can say that I always keep hearing from my mentor, Robert Kiyosaki. I read almost all his books. He always keeps saying that there's going to be a market crash, and he's always excited about a market crash. What he says is that when there is a market crash, you make big fortunes. So I was always hearing this. How is this guy telling that when market crashes you're going to make big money, big money? So my idea was that as a trader, when the market crashes, you'll make big money. This is what I was thinking. But then later, after analyzing, studying everything, what I came to know that is what he is telling is that once the market crashes, you can invest hugely into the stocks because you'll be getting stocks at a very low price. So invest into very good stocks. You'll be getting at a very low price because when market crashes, everyone will be selling in panic. So you can keep accumulating your portfolio, and then once the market starts picking up, you'll be making big profits. This is the overall concept which he was trying to tell, and this is what all the mentors also tell you. When there is a bottom, when there is a market crash, invest your money, and then when it comes up, you can make big profits. But friends, honestly tell me, is this very practical? Because let me tell you the recent 2020 crash which happened in the corona crash. Nifty went till 7,500, and honestly speaking, even I never felt like investing. Reason because we were thinking that it might crash more. So then how will we know that yes, it's time, it has reached the bottom and now it is time for investing all our money? How do you know that? This is the biggest challenge which every retail person faces. I, including myself, face this problem. I faced this in 2020. I did not invest my full capital cash, whatever I was having. I did not invest fully when it touched 7,500 because there was still fear in the market, there was still panic in the market. But then very soon we saw within 2-3 months it went up again, and then we missed the train. But now again it is crashing. You can see almost it has come down to 15,000 change level, and it might go down again. But how do we know is it the right time to invest? I'm sure every one of you will be having this doubt in your mind. So this video will be the answer for this question whichever you are having in your mind, and I am going to explain to you my unique concept, what I am doing, and this will really help you as well. Okay friends, so investment you can do in any stocks or you can do in Nifty, but I am sticking to Nifty because I don't want to take risk in stocks. You can do this concept in stocks as well. Please do your thorough research in these stocks, whether the stocks are going to have a good future and all those things, and then please invest in a good quality stock. Otherwise, like me, you can invest in Nifty Bs. So Nifty Bs is nothing but all the average of 50 good stocks in India. Okay, so what I do is whenever I get any profits or whenever I have fund allocation for investing, I don't invest everything. So I just keep waiting for bank Nifty to become negative closing. So I keep investing in small tranches. It's not that I put all the money together. So but now you might say that Nifty might continue keep going down, and what's the point in investing now? It might go again down. So for that, what I do is I play with something called as covered call and covered put. Okay, so nothing but you all know that in case if Bank Nifty is going up, so then if you're having a covered call, obviously it will give you a theta decay benefit. So all those things, that is with options. If at all you know the technicalities and all those things, you'll be knowing what is a covered call and covered put. But then the most important thing is, friends, you need to know when to use a covered call and you need to know when to use a covered put. So once you understand the concept of covered call and covered put, and then once you start using this idea, you will not have any issues whether the market is going to go down or whether the market is going to go up, nothing of that sort. You will keep making money even if the market goes up or down. So you don't have any guilt of missing out on the profits in case if Nifty is going up. Okay, so I'll do one thing. I'll open an Excel and I'll clearly explain to you what is that I do, and it's going to be very simple. Don't worry, it's not very complicated. Okay. Okay. So as on today, that is 20th June. This is how Nifty is. Okay, I'm referring to only Nifty 50. You can see here Nifty 50. So what I've done is I have opened a daily time frame chart. Okay, so this you can see it's a daily time frame chart, and I have added an indicator that is nothing but the moving average. 21 days exponential moving average. Okay, 21 days exponential moving average. So why I have taken 21 days is 21 days usually is nothing but referring to previous 1 month of data. That is, in 1 month we can expect average of 21 days. So if at all we take EMA 21, we are going to get the trend of 1 month. Okay, so now whenever Nifty is below this moving average, we must understand that the market is bearish. Okay, so let me just use an Excel. Okay, this is a backtested data. I will just explain to you. Before that, I will just mention of the rules for you. So how do we know that the market is bearish? Okay, so if the market is bearish, it means that Nifty is less than EMA 21. Okay, so whenever Nifty goes below this EMA 21, we can expect Nifty is going to be bearish. And when is it bullish? Just the opposite. Okay, whenever Nifty is greater than 21 days EMA, we can expect that market is going to be bullish. Okay, so now friends, you don't have to guess whether Nifty is going to go up or Nifty is going to go down. The rules which I follow is that you can keep investing small money daily, irrespective whether there is a market crash or whether the market is going to go down or up and all those things. But after doing that, we need to implement something called as covered call and covered put. And when is that we need to use a covered call and when is that we need to use a covered put? That is what I am going to explain to you in this video. So we are least bothered whether the market is going to go up or down, all those things. But as a thumb rule, what you can do is whenever Nifty closes with red, you can keep investing in your Nifty. So investing in Nifty is a separate thing, and this covered call and covered put a separate thing. So you don't need any extra fund for doing this covered call and covered put. You can just pledge this Nifty, whatever you are having holdings, whatever you are having, you can pledge it, and with that pledge you can do this covered call and covered put. Okay, so there is nothing extra fund which you require for this. So first thing is very clear, keep investing, don't wait for any good time or auspicious time and something like that. Second thing is we have to implement the covered call and covered put. So whenever you see that Nifty is below the EMA, it means that it is bearish. That's what I told you. So whenever market is bearish, what we do is we have to implement covered call. Okay, and whenever market is bullish, we need to put covered put. Perfect. So the strike price, when, what, all those things I'll explain to you slowly, one by one, step by step. So first thing you have to understand, whenever it is below EMA 21, you have to implement a covered call. So what you do, friends, is every day you can wait for 3 o'clock, that is almost close end of the day. And also it's that you don't have to do it every day. It's all going to be weekly trades only. It's all positional trades. It's not any intraday trades and all those things, positional trades. So what you do is every day wait for 3 p.m. and 3 p.m. Let's say Nifty has come down. Okay, so as of now, if at all you find that Nifty has come down, it is below the EMA, what you can do is you just have to sell a call at the EMA. So the EMA level, you can just see it is 16,018. So what you have to do is you just have to sell 16,000 call. Okay, this is what you have to do. So this is nothing but a covered call. So you already have purchased your Nifty, and mind you, please don't do only covered call and covered put. You need to have your asset as well. Asset is nothing but your Nifty which is with you. Okay, so it's not that you have to have one lot of Nifty, that is all the shares worth 9 lakh, 10 lakh is not required. Even if you are having small quantity also is enough, because this will really support you, encourage you. Okay, so now what you have to do is, as I told you, since this is at 3 p.m. Nifty is bearish, we are selling 16,000 call. This is nothing but a covered call which we are doing. So as of now, we know that Nifty is going to go down. So you just have to sell 16,000 call, and in case if you're good at options and all those things, you can keep trailing, but otherwise you just have to wait till end of the expiry. And all these are going to be weekly options, okay, because in weekly options you get good premium. Sorry, I meant to say good theta decay, so that's why I always take weekly options. So sell it. So it means that weekly there's going to be only one trade. So every Thursdays after the expiry, that is close to 3 o'clock, you can take a fresh trade for the next week. And in case if you're entering any day in the center, that is Monday, Tuesday, also not a problem. At 3 o'clock you can see the position and take the trade. But we are going to monitor, we are going to keep this position till Thursday, that is till expiry. Okay, now the rule for adjustments. So let's say somewhere over here you can see we are below, okay, that is nothing but bearish, but after few days you can see that it has gone bullish. So whenever this close at 3 p.m. any day, whenever you see that it is above, that is nothing but the trend has changed. So then you can close your covered call and then go to covered put. So what is covered put? Again same thing, just look into the EMA. In case let's say for this particular day 30th, you can see here the EMA is around 16,379. So nearest one is 16,350. 16,350 put you have to sell. Here 16,000 call you have to sell. Okay. So in case if the trend changes, that is if it goes from down to top, every time remember you are checking only at 3 p.m. not before that. Okay. So at 3 p.m. if you see that it has gone above the moving average, then you have to close this and then you have to sell the put option. Sorry. Okay, so now what happens is like we are expecting Bank Nifty to go up. So keep selling the put option and then you will keep collecting the premium decay. So in case if the market, if you missed out and entered early also, with this covered call and covered put, you will keep making regular profits. Okay, so now as of now, if market is crashing, what you can do is whenever obviously your signal is telling you it is a covered call, so you keep taking covered call and you don't have to wait till Thursday also. In case if you're good at options, end of the day, if at all you're finding you're in a good profits and almost your premiums have come close to zero, you can square it off and you can take a fresh, that is called re-entry. You can keep doing a re-entry and you can keep taking the premium. So even if you have taken your position somewhere over here also, in case if Nifty keeps coming down, you can keep making profits. Whatever you have, whatever you are lost in your Nifty over here, you can keep making money in your options. And mind you friends, one more thing, whatever profits you are making, okay, so this is the backtested data. So what I have done is, you can see only the first day I have taken is 921. Rest every time I have seen the data at 3 o'clock, whatever it is. Okay, so 6th Jan 3 o'clock you can see I have taken 17,400 put, and then the Thursday expiry 13th Jan I have closed at 3 o'clock and this was a profit. The premium was taken as 43 rupees and then closed at 0, thereby making a profit of 2,165. Again on the same day 13 Jan at 3 o'clock you can see what's the position, whether you have to take a call or a put, and you can just sell it. This is going to be a positional trade, and then since you already have an asset with you don't have to worry about big gaps and big down, because already you are hedged. This is just going to be a hedge with your existing positions. So if at all you feel it is going to be very risky for you, then what you have to do is you can always use a hedge. That is 2000 points far you can use a hedge, thereby it becomes a credit spread or a debit spread. Okay, so friends, one more thing is like for purchasing one lot of Nifty, the amount required for you is 10 lakhs, and for 10 lakhs you are going to implement one covered call and covered put. So even if you make a big overnight loss also, the loss is going to be very minimal, right? So that is the overall money management plan. So don't think that you lose a big money, but this is how we have to keep implementing every day 3 o'clock. You don't have to see every day 3 o'clock, but in case if the trend changes, then 3 o'clock, every day 3 o'clock you might have to take a change, but it happens very rarely. You can see 6th Jan I have taken a trade, it has closed at 13 Jan. 13 Jan again I have taken a trade, it is closed 20th. Again 20th we have taken a trade, it is closed 27th. That is nothing but end of the expiry. Okay, so this is how I have taken the put and the calls. This is how we decide whether we have to take a call or a put. So by this what happens is we keep making money, and whatever profit you are getting, remember this money please use reinvest for again buying the Nifty. It is very much recommended because you will keep averaging whenever you go down. The only stock which you can keep averaging when it goes down is the index, not in the other stocks. Other stocks, when it is going down, you should not average. It's very dangerous, it's very risky. But in index, this is the beauty, you can keep averaging it even when it is going down. Okay, so then what happens is that your overall investment keeps coming down. Okay, so yes, there is going to be losses as well. You can see there are a few times we get losses also, but we are not bothered about the losses, because if you keep doing this for a long time, the profits are going to be much higher than the losses. If at all you see, the overall profit is close to 75,000 rupees. This back test I have done started from January, that is 2022 latest, and within 5-6 months you can see almost we made a profit of 75,000 rupees, and that is almost close to 7.5%. Okay, and mind you, this profit whatever you are getting is you are reinvesting. So again your investments is getting averaged out. You are getting much cheaper entries, re-entries. Okay, so this is without rolling on, without rollouts. Okay, I have waited from week to week. In case if you're good at options, as I told you, whenever options from let's say you sold at 40 and it comes close to less than 10%, that is 4 rupees, 3 rupees, you don't have to wait till Thursday. Sometimes it will happen on Tuesday itself, sometimes it might happen on Monday itself. At that time you can again close at 3 o'clock and again take a fresh position, so you will make again more profit. So there are many variations of doing this, friends, but this is the overall structure. I am not going to give you 100% spoon feeding. This is the overall skeleton, the overall structure. Based on this input, you can make your own, you can use your own skills and make it more powerful, more robust, however you feel. So the different methods to make it more robust is, as I told you, is you can add an hedge in case if you don't want a big to avoid black swan events, or otherwise, as I told you, you can keep rolling your positions daily in case if you want, so that daily you can take your profits, and with the profits daily you can keep investing whenever Nifty goes down. So there are many variations to this, you can do it. But this is the overall concept. Whenever market is bearish, you have to implement a covered call, and whenever market is bullish, you are going to implement a covered put, and you can check everything at 3 o'clock. And what's the strike price which you are going to select? The strike price is nothing but the EMA which we have taken, that is going to be the strike price which we are selecting. Very nice, very special, very unique. You can do your back test as well. I have done it. In case if you want this file, you all know the procedure. You can just WhatsApp on the number 8095876525 and you can collect this file. I have done my best. Hope you understood the concept as well. And friends, please, I recommend you to please press the like button. In case if you really like my effort, it will really encourage me, motivate me to again make more research and spend more time for doing all this research and share it with you as well. So I recommend you to please press the like button, and also in case if you're not subscribed to my channel, don't forget to press the subscribe button as well. You'll be getting regular such researches, such strategies, and lots of learnings, live trades, etc. Thank you and have a nice day.